Wednesday, October 18th, market analysis, Stan Ehrlich. I start out with the indexes. That would be the S&P 500, and specifically the E-mini December futures contract. When you see green, it's our ER signals buy signal. And when you see red, it's a sell signal. They don't always work, but they do pick major turning points frequently. All right, so we're long from almost exactly the low of the day on October 9th because it was the day after the signal. And we're also long from October 6th, Friday, a week and a half ago, with ER1. So where are we right now? We're at the lowest lows since the original breakout of the signal, which means that at the very least, we're about to get stopped out of the last position. Not necessarily, but typically. So any lower lows, I'm not going to like it, especially on a closing basis. It's not going to change my opinion that the October lows have taken place on October 4th, or you could say October 6th with the reversal. Doesn't matter much. They're almost exactly the same low price, very close together. Now, the previous head and shoulder top formation, I've erased all evidence of it except for the neckline, where we have been above and below and above, and now we're back below it again. Not typical of a neckline activity whatsoever. Once you get below it, which we did September 21st, and it was working great until, of course, Friday, a week and a half ago, with the bullish engulfing, which drove it up into and well above on a closing basis for several days. The neckline, not supposed to happen. Okay, so pattern's gone. What do we have now? Well, basically, 1, 2, 3 down, for example, if you like Elliott, and a downward slanting channel would fit within description here. So downward slanting patterns in general are usually sooner or later bullish. Now, the question is, can we break above very soon, the next few days, week, the high that we made on December 12th? And that was right about 4,431 to 432. So here we are at 4,361, and at the bottom of the range that has been created, which I'll show you in a variety of ways coming up in a moment. So this could be a very low risk entry point if you're willing to get stopped out below the lowest lows of the last 6 or 7 days. I would consider. So, on the other hand, some people would like to see it break above and close above, and I sure would also the recent high in the last same number of days. We've gotten into a rock and a hard spot situation, and we're bouncing off the hard spot at the moment, but we got to break out above these highs. Next chart is, here we go. The spider daily data did, of course, on the 6th of October, get a bullish engulfing buy signal. It is doing almost exactly the same thing as the E-mini. They're just different trading hours. And we have resistance above that's stopping the rallies. And then we have support below that so far has held the market 2.5 times right around where we are now. So we don't want to see too much lower. I would not like to see it get below that little green zone I've got blocked in here. And that would be the low on the 13th, last Friday. So those are our boundaries. Just don't want that to happen. Could cause some changes, maybe. We'll see what happens. Next, the spider 1 minute. We've been making new lows while I'm talking. Now the Qs are near the support, never did break out of the head and shoulder pattern, and are in what you would call a downward slanting channel or maybe a downward slanting wedge. That's a pennant that droops down a little bit. Both lines are slanted downward. And that support level below, you would expect it to hold maybe. So you got a little elbow room to the downside before any major problem. I'm still basically very bullish, looking for new highs into November. And then the Santa Claus rally is coming next. NASDAQ futures. And, same as the QQQs, the Russell, or the DIA, I'm sorry, has a little bit different situation. We've managed to get up to resistance and go through it and stay above it a couple different times. So this downside correction today in the DIA is just into the middle, excuse me, of the range that we've been looking at for the last 6 or 7 days. So it's held up better. Excuse my cough. Terrible. Okay, next. The last index, Russell, we have support, major historical support kicking in the last month, and so far so. I really would like to get above the high that was made on October 11th, and that would look like a little bit of an upside breakout. And there's a gap to close at higher levels also at 180-ish. So that's a draw. Let's see what happens. We're going to go now to the October low chart real quick. My expectation was on the 16th of October, which was Monday of this week, I was going to get a low, which didn't happen. And it was going to be around 406, 407, and that didn't happen. But the reason is it's the middle of October, and that was the downside objective on the previous head and shoulder top, which I've almost erased completely the evidence of, and so on. We got a fantastic sell signal on the top of the S&P 500 to the July 27th exact top date. And so far, we came super close to the lowest low only a few days earlier than the signal that we got on October 6th. So far, so good. It always gets a little bit concerning when you're down here. You don't see a turn yet, but this is a good spot to consider doing so. So let's see what happens. I've said that. Next chart is going to be the futures. Now, this again is the E-mini. It didn't change much, did it? Did it in the last few minutes. NASDAQ, same thing as well. And now the bonds. We are trying to make a new low for the whole trend, and maybe we did make it by a few ticks. It looks like we're going to have a new low closing for the trend down. Sorry, we're out of the trade at the moment, but we did get stopped out of a whopping great 6-month bearish position from a red ER sell signal and an ER3 entry the next morning. Never a closing loss. Yeah, well, no, doesn't look like it. And all the way down for about 6 months. So we're out. It implies that the market is trying to build some sort of a significant bottom. I don't see that quite yet unless we're going to turn into a double bottom here, but we're not quite oversold. We're driving down. It looks like it's going to make new lows. It looks like it's going to drop off to 106 something. 10-year notes have already started to do this. Of course, they're shorter term. So leading the way, so to speak, not surprised. I'm not sure how much lower is lower. Next, crude oil. Popping up a little more than I would have expected, but I did start talking about the higher lows and the higher highs for most of the year. And that defines an uptrend that's so far intact. We last bounced off support area, not particularly accurately, but it did. And here we are at new highs, a new high close likely. So I would expect a challenge of maybe 94, but getting pretty close to it very easily at this point. Next, major historical resistance has stopped this heating oil market for quite a while now, a couple of years. And it looks like it could have done it again. I need to see more weakness. I want it to close below the red zone, which it bounced off of in oversold conditions week or two ago. Kind of neutral momentarily. Next chart is natural gas. We are short an ER3 trade the morning of October 12th because it was above our offer because of the red bearish ER sell signal the previous day on October 11th. Closed with a profit, and now finally maybe it's going to close with a little bit less profit. Right now we have sideways price movement for the most part, trailing stop intact, looking very good. Got no problem with what it's doing. I could expect a rally back up to approximately 3.225-ish. There is a small gap to close here. I should have put a little gap zone in here. So yeah, that's almost exactly the same number, 3.200. Next chart, and then down. We've got a couple of trades, one offset already back here because of a green bullish engulfing out. Another green bullish engulfing at the bottom of the gold market again. We have done extremely well this year in precious metals. We have another new substantial spike to the upside and probably a new high close well above previous highs for only 3 days. This is doing fantastic. We are long from about 1,844. It's 1,962. Next chart. We are currently in the trade. If you adjusted your strategy so that the trailing stop would go up a little bit slower, I think I was bumped out a couple of days ago. I just wanted to show you if, and you could have easily done that in advance or gotten back into the trade and made the adjustments to the STS and follow it that way. That's interesting. And we just missed, oh my God. I didn't see that happen. We just missed almost getting stopped out again. So I kind of like the way the STS is positioned. How about that? Okay. Gold doing great. Next chart is silver. Unfortunately, no buy signal at the bottom, but oversold in support. So no surprise, we got a rally. I didn't expect it to be quite this much. Now I'm expecting to see probably 24.10 to be challenged, and that's not that far away now all of a sudden. And I don't think this is out of the question whatsoever, getting up to 25 1/3 again. Next chart is platinum. We did get a buy signal at the bottom of the market on platinum, October 6th. We have a new high for the move since then today, but this is a bearish engulfing. It's not an official ER sell signal because we're not in overbought condition, but it does imply that the market's going to slip a little, usually. As long as it's not too much. I do not want to see it get below 867 1/3. That would be my fail safe. If I was still close enough to be still long, my stops would be tightened up quite a bit since the bearish engulfing existed, which was when it made a low lower than yesterday's low. That was the beginning of it. And now in order to erase that, it's got to go all the way back to higher than where it opened and get higher than yesterday's close. That would be quite a rally from here and quite friendly. But as long as it's an outside down, that's not the case. We'll see what happens here. Okay, so high-grade copper, new low, but not a new low close, which I alluded to yesterday, and popping up a little bit today, follow through. That was a classic bear trap, you could call it. I don't think the rally is going to last very much more, if even up to 3.6753, maybe. Let's look at it if it gets there. Otherwise, it's lower lows and lower highs, bear trend. Next, soybeans. Very interesting. We had a buy signal on October 12th. Classic ER green buy signal, bullish engulfing, oversold conditions. Bingo. We bought almost the low of the day 4 days ago, 3 days ago, that is. And it was because of the mathematical calculations to come up with a price because of the signal the previous day. We're in the ER3 trade. It's coming along great. New high and likely a new high closing price, but not a really big net change so far for the day. Perfect. This could develop into something really big. I don't know when these signals occur. Sometimes I get some very strong, very bullish long-term impressions. Sometimes maybe not, like this. Remember, there's a lot of resistance overhead. I should pull this. Oh, we actually touched it. We bumped into that today. So yeah, maybe a little bit down and then up more. I got to be bullish. Bullish signal at the bottom. Got in just right. Come on. Let's see what happens next. Bean oil, same story. I'm showing you the ER1 in this particular case, not the ER3. So the ER1 bought at the day of the green. And we have at the moment a slightly lower than yesterday's close current quote, but not a high higher than the previous day's high. You can see we just took profits. So we're out of the trade using the inputs that we have been using. In this particular case, I think it was a 2, which is a very short-term tight stop, made a profit. Name of the game. Next trade. Symbol I meant, soybean meal. Oversold, support, darn good bounce, but guess what? We're overbought now. First day since the oversold. And we're coming very close, very quick to the major resistance area. Again, up at 417, a bit higher, 25, 417 to 25. We could get there real quick. That would not look impossible at all, but we're getting more and more overbought by doing so if it's quick. And I would definitely be looking for sell signals coming up very soon. But I think we're going to see a bit more, the last bit of strength, and then down again. Next, corn is going to go the way of the wheat, which is the next chart. So I think this is about to turn down and make new lows for the whole trend, which is exactly what wheat did around the middle of August, September, beginning of September. Made new lows, kept on going, and we've got a little rally the last week and a half, 2 weeks. Not much. Lots of resistance overhead. Don't expect it to go anywhere further than at the most 618, 19, and then down. Next, live cattle. Not very sure about cattle. I'm going to leave it alone for another day, because I'm expecting some sort of beginning of a move, and it's probably going to be closing below Monday's low or above Friday's high. Those are my two little short-term boundaries here for minor little telltale bullish or bearish signs. Next, new low closes yesterday below what was support, now turning itself into a little bit of resistance. If we cannot go up more than what we just did, which is hardly anything, just barely back into that now resistance area and start chewing away at today and yesterday's low again and going lower, well, that's it. We're probably going to go all the way down to 52, 53. That's a pretty big move. This is a tipping point. Next chart. Being OJ. Okay, ladies and gentlemen, this is the first time I have the opportunity to tell you I think orange juice and the green tree disease may be over. This bull market has got another bearish engulfing ER sell signal today, the 18th of October, 2023. I don't know at this particular moment whether this is the beginning of a long-term bear market, but this is exactly what I would love to see at that point. And I have seen many of them. So I have no other choice but to say, if you're a long-term investor and or in the industry and or think that there's other reasons that I don't know, fundamental ones maybe, that tell you that that's a good potential. This bearish engulfing could be a very important turning point. Do it. Your risk, in my opinion, is just above today's high. If you wish, maybe above the highest high for the whole trend, 392.5-ish. Still, in the large scope of things, this could come down at a minimum, even if I'm wrong about a major top, at a minimum, let's say 360. And if we get there and that doesn't hold and it starts to break below a next major support area, which would be about 340, 335, that's much more important longer term. Let's see what happens to this signal in the next few days and weeks. Finally. Okay, Coco. Hey, this is interesting. We got overbought today, first time on the way up. It is in that little arch mark that I made only a week or two ago. It is at the price levels at which I would expect the possibility of the last shoulder. That's what I'm pointing out here before it happens. The last shoulder high. The high is just a little higher than I would have expected, but now that it's overbought and it's lower than yesterday's close, it could be a reversal to be very much aware of at a minimum. It looks pretty darn good. Timing-wise, price-wise. Now, the last shoulder, or first shoulder, I should say, took about 2 weeks, week and a half. Are we going to fiddle around in this range or so for a week and a half? Maybe. That would round out the symmetry of the pattern when head and shoulders are frequently pretty symmetrical. One of the reasons I'm pinpointing the shoulder time frame is because of the symmetry. And the other reason is because of the prices are oftentimes for the shoulder left and right to be around the same price levels. Okay, I've already drawn in my neckline if the pattern is going to develop properly. And it's way too soon for most people to even see the head and shoulder pattern. I've seen thousands, so I see them. And they don't always work. Okay, and I know what to look for. That's probably the most important thing. If it doesn't work, what to look for. Okay, so far so good. The downside objective, if the breakout took place anywhere around that date, which is the end of October, is supposed to be around 3,000, almost exactly. Next chart, coffee, rallying, overbought, in resistance area, could get up to the top of it very quickly at the last stages of being overbought. Sometimes they're very quick, very sharp little rallies in there. So that's not out of the question. And then down again. So intermediate, a little bit more friendly to starting to go down. Longer term, let's make new lows. Next, sugar to sweet. It keeps coming. Okay, so new highs expected, new high closes expected, not overbought yet. Lastly, cotton the rag. Got oversold yesterday, did drill down a little bit more to new lows, but now we're a little higher on the day. Current quotes, minor upside reversal, resistance overhead, so we're probably not going to go more than 85, 30-ish, and then turn down again. I expect new lows soon. Next and last, the E-mini is bouncing off of some lows here. Let's go quickly look at the short-term charts, and I'm going to say goodbye in a moment. That's a pretty good rally. It came right to resistance here on the 1-minute S&P chart for today so far. Spike bottom, very oversold conditions, turned around very quickly. I want to see it get above 433.60 ASAP, and it's 20 points away, 15 points away, ticks away. Then I think we're going to accelerate up to something much more interesting, only a slight bit lower for the day, and a chance it would turn around completely, make new highs, and close above yesterday's close for a test of support that passed the test great. But again, that hasn't happened. We could still stop where we're stopping. tipping point again. That's it. You guys, great. Talk to you tomorrow. Have a great trading day.